All right, guys, welcome to another live stream. Welcome to another live stream. Happy Tuesday. Happy Tuesday. All right, so the markets are crashing. Everything is down 20, 30%. The crypto market, the stock market, certain stocks, the overall indices. And these are five things to remember when the market crashes. A lot of you get worried, a lot of you panic sell. So just remember these five things. We'll go over them and then we'll take a look at the market, right? So number one, market crashes are normal. History shows that market downturns happen periodically, but they usually are followed by recoveries. The S&P, for example, has always bounced back from every major crash, and that's important to note. Typically, even in cryptocurrency, even though it hasn't been here as long as the stock market, it typically always bounces back. Now, for crypto, obviously, we're talking about blue chip assets like Bitcoin and Ethereum and maybe a handful of other coins. But when we talk about blue chip stocks and we just talk about like the S&P or the Dow Jones, it always comes back. So you need to remember that, and you need to learn that it'll come back in a month or two. This is just a down period. And if you go and look at any chart, whether it's Tesla, Nvidia, or whatever the case may be, you see crashes throughout the charts, right? And they always come back. So remember that market crashes are normal and they tend to happen periodically, right? Okay, number two, your long-term plans matter more. If you're investing for the long run, short-term volatility shouldn't dictate your decisions. Stick to your strategy unless personal financial situation has changed. And yeah, so you want to be, for the most part, I invest for the long term, right? My positions right now are for the long term. Most people should be investing for the long term. If you're trading, obviously this hits you a lot harder depending on what strategy you're trying to implement, whether you're going short or long. But most of you should be thinking about the long term. A lot of these assets take 3 to 5 years to mature and get to the price level you want it to, so you can hit your financial goals. So when you see market crashes, think about the long term, right? You shouldn't even be looking at your portfolio if you're thinking about holding an asset 2 to 3 years, or maybe even for the next year. That's even a decent amount of time. So when you see a stock or a crypto crash within a week, just know that that's just short term, and you need to focus on your long term vision. And most people should be focusing on long term. I used to trade before, didn't make any money. Most traders lose. So focus on the long term vision. Make sure you have a 3 to 5 time frame when it comes to the stocks or cryptos that you invest in. And yeah, I think you'll be fine. And also remember too, you want to buy low, right? That's the whole point of making money. So when you see crashes like this, you should see them as an opportunity to either dollar cost average into your favorite assets that you already have a position in, or start a position, right? You want to start a position when things are red. It doesn't make sense to me when people complain about the market being down, especially people that haven't even started a position. Well, wouldn't you want to get a stock or a crypto for a lower price? That way you could sell it for a higher price. So when you get market downturns like this, you want to buy those assets, right? And right now, everything's crashing. It's not like just one stock is crashing. Everything is pretty much going down across the market, stocks, crypto. It's just down for all these assets, right? Okay, number three, panic selling locks in losses. Many investors sell at the worst possible time when fear is highest. If you sell in a panic, you miss the opportunity to recover when the market rebounds. Yeah, especially if you bought at the height of something and now you see a crash, a 30, 40% crash, and now you're panicking and you sell your position, you take a loss. Maybe you put 5 figures, 6 figures in, and you're down 30, 40%, and you're panicking because you think it's going to go to zero. You got to understand, you're going to take serious losses when you sell when everything is diving, right? So you need to make sure that, one, you do your research on the asset. I think that's probably the biggest thing. Like for me, when the stock market crashes or the crypto market crashes, I'm not really worried about my assets, right? Because I did the research. So I understand that the assets that I hold in my portfolio are quality, right? So as long as your assets are quality and you believe in the future, you shouldn't be worried about a 1 week crash, right? And you shouldn't be selling during this time period. Again, if anything, you should be adding to your position because you want to buy low and sell high, or you don't do anything, right? You just don't look at the market. That's another strategy. Just don't look at the market. A lot of you like to look at the market every 2 seconds. I have the bad habit of doing that just because I got to keep up with the financial news. So I'm always looking at the charts and things like that. So I know sometimes it's hard to not look at the chart, but if you could avoid doing that, that will probably prevent you from selling, right? All right, number 4, opportunities emerge in downturns. This is what we alluded to earlier. Market crashes create buying opportunities. Quality assets often go on sale, allowing disciplined investors to accumulate at a lower price. And this is true. Over the last week or two, I accumulated more of my favorite crypto assets. And yeah, I think why not? If I'm going to buy it at a higher price when it was higher, why not buy it at a lower price, right? It just makes sense, especially if I know the potential of that asset. And hopefully this is not freezing. I don't know why, but I have it. Hopefully it's just not freezing. It looks like it is, but I'll continue speaking. But yeah, opportunities emerge in downturns. Like I said earlier, you don't want to buy when things are high. You want to buy when things are low in price. So that way, when we do see the upside, you gain a lot of money, right? You make a lot of money. You clock in a lot of gains because you accumulated when the price was low. So you don't want to accumulate when the price is high and then sell when the price is low. So just know the opportunities come when the market is in the red. All right, number 5, control what you can. You can't control the market, but you can control your emotions, your risk exposure, and your strategy. Focus on diversification, cash reserves, and staying informed rather than reacting impulsively. And this is true. You can't focus on what you can't control. The market's going to do what the market does. And all you can focus on is having a cash pile so you can take advantage of these opportunities. You can control your emotions for the most part and your risk exposure. Maybe you shouldn't be as exposed if you can't handle a certain volatility. So those are control what you can control, especially when it comes to your emotions, the amount of money you have stashed away so you could take advantage of these opportunities. And also, maybe you diversify, right? You're not all in one sector. So those are the 5 things. Number 1, market crashes are normal. Number 2, your long-term plan matters more. Number 3, panic selling locks in losses. 4, opportunities emerge in downturns. And 5, control what you can. And yeah, so let's take a look at the market and let's see what's going on. All right. Let's see. And hopefully this is not too spotty. I'm gonna rewatch this. Hopefully not. I don't know if I gotta get a new webcam or what, but this is kind of annoying. I don't know if it's the internet, but it's crazy that you pay all this money and things don't work. All right, so the crypto market is suffering. It looks like BTC is actually coming back, but we did take a huge dip today from 94 all the way to 86, right? Now, again, like I said, if we look at historical returns for February, it's typically positive for BTC, average return of 13.44%. And then in March, it follows with 13.42%. So if we see a down month for February, it doesn't look like BTC. I mean, we only have a few days left, so I'm not sure if BTC can save itself. But yeah, a few days left to see if it turns around. But if we don't get that turnaround in February, I believe we'll get that turnaround in March, right? So overall, crypto markets are down. BTC took a huge dip. Fear and greed, a lot of fear. We just saw the fear and greed index at 40 the other day, and now it's at 29. So yeah, just red across the board, right? So just remember those 5 things when we see red. Take advantage of these opportunities. All right, and the same thing for the S&P. The S&P's down. The Dow's did somewhat okay today. The Nasdaq is usually like the risk on assets. Like everything with tech went down today. So yeah, Intel went down. Everything went down. So that's actually a positive sign when everything goes down. You know, it's just more of a buying opportunity, and it's not like a specific asset class or anything like that. All right, that's pretty much it. Hopefully this thing wasn't too spotty. But yeah, just remember those 5 things. Take advantage of the market. I'll see you guys in the next one, and have a good day.